Hey, this is Bubble Analytics, and this week we're going to create something we call a ratio oscillator. So the ratio oscillator is going to take a ratio of the 3 times bull ETF SPXL versus the 3 times bear ETF SPXS, and from that we're going to create a ratio and then overlay a stochastic oscillator onto that data, which we are then going to use to time our entries and exits into the market and out of the market. So the idea of this one is that due to the highly leveraged nature of those ETFs, you would expect those to be used by professionals or people who at least sort of know what they're doing, even though that is debatable, and you probably see a lot of traders use them that maybe shouldn't be doing it. But the idea is that when the ratio rises, it suggests that we are seeing bullish appetite for the markets. And when it falls, obviously the bears are more in control. So we're going to create the ratio oscillator, which is the indicator you see under price here. And rather than use it for oversold and overbought positions, what we're going to do is trade on the blue line here in our indicator. Whenever it turns up, that is going to be our buy signal. For our sell signal today, we're not going to, you could use it to sort of trigger sell signals from overbought positions when it turns down. But in our case, what we're going to do is set profit and stop targets and come out of the market that way instead. So if you are ready to start coding it up, please first read the disclaimer. Okay, let's begin then. So to start with, I've opened up a fresh Jupyter notebook. I've renamed it RO for Ratio Oscillator, and I'm going to click into the first cell and hit Shift Return a few times to create some empty cells. We'll be pasting from our template today to save a little bit of time. This contains repeatable code snippets that we use each time to create a strategy and then backtest it. Both the completed notebook that we make today plus the template are available to download for free. You can get that from our GitHub profile, and the link is in the footer here on our website. So let's get going then. First job, as always, is to import our libraries. These contain pre-built functionality you can make use of to achieve whatever it is your coding goal is. In our case, most of these libraries are to do with backtesting. So I'm going to paste these in and hit Shift Return to initialize them in the code book. And then next job is going to be to create some data or download some data. So we're going to get historical market data using the Y Finance library here, Yahoo Finance, which we imported as YF. If I paste all that in, hit Shift Return, this is the output you should be expecting. And the key line is the one at the top. Let me just comment these out. So we are telling it to use the Y Finance library, YF, using its download method, which takes a minimum 3 parameters. You need to tell it the ticker you want the data for, period of time you want that for, and the time frame. So in our case, we're saying, please download 10 years worth of daily time frame data for QQQ and pop it in a data frame called DF. And then if I run this now, so if you want to have a look at what's in your data, in your variable, just type the variable name DF and then hit Shift Return. And you can see that, we have sort of superfluous column names here, stuff that we don't really need or expect to see, and these lines just tidy that up. So first line is going to get rid of that ticker line and the QQQs across the top there. Next line is going to split price and date into their own columns. So we're going to reset the index, making price the index with the row numbers on the left hand side. And then in the date column, even though these look like dates, they're actually number strings. And if you want to use the date as a date time, in a date format, which we will be doing when we create our chart and putting it across the x-axis later, you need to convert that into a date time format. So this line uses the pandas library, which we imported here as PD, and uses their toDateTime method to convert the values in that date column to a date time format. And then finally, this line, because we're not going to need the volume today, I'm going to delete it. So if I now run that again, this is your data set. And the only difference that we're going to be making today is that we're going to be creating a strategy around the S&P500. So the ticker on Yahoo Finance for that is little Chinese hat and then GSPC. So that is the only difference there. And then because we're creating a ratio oscillator, what we're looking for is the ratio between the SPXL, which is the 3 times leveraged bullish ETF for the S&P 500, and SPXS, which is the 3 times bear. We're going to use the ratio of those 2 data sets in order to create our indicator and then our strategy. So what we're going to do is download 3 lots of data sets. So S&P 500 and then SPXL for long, and then SPXS for short. And then obviously got to change the data frame name here. So to do that, you just Control F. And if I come up, where am I? There you go. So we're going to change these ones from DF to DF1. So if I just hit replace a few times, there we go. And then for the SPXS, that's going to be DF2. There we go. So if I now run all this, we should download 3 lots of data, which you can see here. And if we want to go and have a quick look at what's in our data frames, our variables, so DF has S&P 500 data. Keep an eye on the close price there. DF1 should have a different price, and that is our SPXL ETF, and DF2, same thing. Okay, so now we've got 3 data sets, DF, DF1, DF2. And now we're going to create our ratio data, and to do that I'm going to create a 3rd data, or 4th data frame called DF3, and that, to initialize it, basically I'm just going to pull the date column just so that it's the same size and shape as our other 3 data sets. I'm just going to pull the date column from DF1. So to do that, you just say DF3 and then call DF1, and then you want 2 lots of square brackets, so you're going to return it as an array. And then we're going to take the value in the date column, and we're just going to make a copy of that and bring it over into DF3. So if I now run DF3, I should just have the date column in here. So now next job then is going to be to create the actual ratio data itself. And if you did this sort of, so open versus open, so ratio of the open price for SPXL versus the open price of SPXS, you would end up with an unbound oscillator. So we're going to create a stochastic today. So that is typically trading between 0 and 100. And if we did open to open ratio, low to low, high to high ratio for that, you would end up with an unbounded oscillator where the indicator values rise just outside the 0 and 100 ranges, and I don't want that today. So instead of doing the open to open, it will be open to close, close to close, high to close, low to close. Well, I'll show you. Right, so what we're going to do is within DF3, we're going to create some columns. So we want, obviously, we're going to do OHLC data. So we want, in fact, let me just copy that. And then, so we're going to create our 4 columns. So, and that's going to be open, high, low, close. And then they are going to be equal to, and then we're going to take the, so we're going to match the, in fact, I can't copy that. So we're going to match, so it's going to take the open column from DF1, and then we're going to divide that. Instead of doing the open column from DF2, instead we're going to take the close. And it took me ages to figure out this, but but it's true. You need to do it on the closing prices, otherwise you just end up with a very weird looking stochastic oscillator. So okay, so DF1 then, so let's do the high next, and I'll just paste that in there like that, and then DF1, we want the low, and then finally we want the close, right? So okay, all right, so if we now run that and have a look at DF3, what we should now see is ratio data rather than price data. So OHLC data, see the values are all slightly different. And that is what we're going to be using to create our stochastic oscillator. So what we're going to do is create full stochastic today, and we're going to have slightly different settings to standard, but effectively the same thing. In fact, if I come in chart score. If I come in here and read the article, honestly, I'm a terrible explainer, and you will get a much better definition of the indicator and how to use it from stock charts. But effectively, this is the calculation for the stochastic oscillator, and you should know what it looks like. It looks like this. And then there's fast, slow, and full. We're going to be using the full today. And rather than using 1433, which is the values here, the standard indicator values, we're going to use 1044, but effectively it's going to be the same. So, and then we're going to recreate this chart here. So, but obviously with only one indicator below. So let's go on with that then. The stochastic then. So what we're going to do is create a function called, I guess, stow, and that is going to take in some data. We need to tell it where to find our ratio data, and then it needs two numbers. So I'm just going to call them N1 and N2. And then what it does is compare, the key line is comparing the close minus the low and dividing that by the high minus the low. And that's what creates one of your main lines. And then you sort of key off that main line to create the indicator. Again, come back in here and have a look at that. But basically %K and %D is what you're looking at. These lines here, that's what they're called, %K and %D. And so you're looking for the close minus the low divided by the high minus the low times 100, and that's %K, and then %D, which is the one we're going to trade off today, is an average of %K. So let's create that then. So let me just create a little bit of space here. So first thing we're going to do is we want to return the high value. So I'm just going to call that high. And that is going to be looking in our data frame here and looking for the value in this column here. So that would be data high. And from that, we're going to create a rolling window of N1, which is our first sort of look back period. N1. And do you know what? We need more than that, don't we? We need three numbers for this one because it's the full stochastic. Sorry. Yeah, the standard stochastic would just be the look back period plus whatever smoothing you want to give %K. But in this case, with a full stochastic, you have three numbers, even though in our case they're going to be the same numbers today. And from that, we're going to return the maximum value. So for our high, what we're doing is we're looking in our high column over a rolling look back window. In our case, that's going to be 10. So we're taking a rolling window of 10 values from the high column and then returning the highest value from that. And then for our low, it's like very similar, just on the low column. And obviously, instead of taking the max, we will be taking the min. So that's our low, and we want to take the min instead. And then for our K, what we're going to do is look at the close minus the low. So that would be the close. Have I done that? Yeah. Minus the low. Oh, in fact, I don't need that now, do I? So that can be in low, and they're going to have to be in their own brackets. And that is divided by the high minus the low. So, and they'll have to be in their own brackets, won't they? And then we multiply the whole thing by 100. And because we're doing that, we should put everything in its own bigger bracket. So that is our K. And then what we're going to do is create a rolling mean of K. So we're going to slightly amend it today. I'm just going to call that KX, and that is going to be a K, and we're going to take a rolling window, and that is going to be our third number value when we create our formula, create our function, and from that we're going to create the mean. And what we're going to do now is create %D, so D would just be KX dot rolling. And that would be N2 dot mean. Did I spell all that right? So, okay. So, normally what you would do to create D is you would base it from just K value here. So, effectively, and that would be a standard oscillator, standard stochastic oscillator. You would create D from this value here. But instead, what I'm going to do to customize the indicator a little bit is to create an average, or I'm going to smooth the values in K before I create D. So, and that's it really. And I don't know why I've got a bracket there, but there you go. So I think that makes sense, doesn't it? So, and then all we're looking to do for our function here is to return the values in KX and D. And hopefully that'll make sense in a minute, but we'll do a little bit of tidying up on the data first, and then we'll create the indicator values into our data frame and then create a chart, and hopefully you'll be able to see sort of what it looks like then. So I'm going to create two new columns within our data frame, and they're going to be, we're going to create in df3. So they are going to be K and D values basically. So df3, K, and then D. And that would be equal to run our new function called stow, tell it where to find our ratio data, which is in df3, and then tell it what our three numbers are. And like I said, you actually only need a 2 here because n2 and n3 are actually the same number, 4. So that looks like that. And then, so if I now run df3, what we should have, I'm running df. Force of habit. What you should see is now we've got two new columns with oscillator values, our stochastic oscillator values in columns K and D. So if you notice here, we've got some non-values. These not a number values. They're there only because at this point in the data set, the early stages of the data set, we don't have enough values to compute these roll-in windows. So we don't have 10 values effectively at this point. So anytime it encounters that, it says, well, we don't have any data and therefore I can't produce a value. So we're going to tidy that up a little bit. So we are going to use the drop NA method and do that on the existing data frame. So if I now run that again, you should see, there we go. So we've got our ratio data here and then our indicator data here. And that's all well and good, but we want one data set or one data frame with actual price data for DF. So what we're looking for is to take the S&P price data and display that on top, and then our indicator values below that. So we don't want to display ratio data on the chart. So what we're going to do is tidy up this data frame and then merge it with DF, where we've got our S&P OHLC data. So in order to do that then, we're first going to delete some columns from df3. So we don't need these anymore. We don't need the ratio values because we've already got our K and D values, and that's what we kind of need to take. So I'm going to delete df3, excuse me, and then the open df3. Right. Did I put a comma? I did. Hello. And then df3 close. So we don't need that data anymore. So if I now run that and then we go and have a look at df3. Oh, what's happened here? What have I done? Oh, open. Did I spell that differently? That's a bit weird, actually. I think that should work. Oh, well, not to worry. What we'll do is we'll just merge the data into DF, and then we will look for that. So within our existing price data frame, oh, I see. It just doesn't like running after the delete function for whatever reason. That's a bit weird. Let me run that again. There you go, you learn something new every day. That's weird, isn't it? So after we deleted the column names there, it did not want to output what was in any of the data frames, basically. Not within that cell anyway. You could probably come down here and run it there to have a look, but it just didn't like it for whatever reason. So I've run it all again, and this is what you're left with now in df3. So you can see all we've got is our date column and values for our indicator. So what we're going to do then is merge that with price data, and the price data we want to show is the S&P500, which is in DF. So all we're going to do is use the merge method here, and we're going to merge DF with DF3, and we're going to do that on the date column. So that should be in, there we go. So we're going to do that on the date column. So our date column's effectively acting as our index. And how are we're going to do it on the left? Basically, we're going to default to, so all the values in DF are going to be on the left hand side, and the indicator values that we're pulling from DF3 are going to be on the right. So how is, and you could pick right or left, but we are going to do it like that. So if I now, let's have a look and see if that works on diff. I don't know why that does that, but if I run it like this, you can see it still doesn't like it, doesn't it? Oh, capital. That should be a lowercase left. And it still hates me. This is code in a nutshell. There you go. All right. So, and now you can see what you've got is price data for the S&P500 and your indicator data there. And you've still got some NaN values, which I'm going to tidy up now. So again, just use that drop in A method. And then on the existing data frame, and make sure you spell everything right, Ben. And there we go. So now we've got a nice data set and we can work with this. So we've got price data we can show on our price chart. We've got our indicator data. So let's create that now. So let's do the chart. So what we are going to do is come in here now, and because we are creating a chart with a price above and indicator below, we need to make a subplot for that indicator data, and that's what this code snippet does here. It creates 2 rows. So price will be in row 1, indicator data in row 2, 1 column. Shares the x-axis with the datas, and then splits the sort of chart real estate. So row 1 with price is going to get 68%, row 2 is going to get 32%. And then this code snippet here is where you actually just pull in your data. So effectively you pull the open, high, low, close data from DF, which we've renamed DF1 here. But so I'm going to take all this section here. I'll just get on with it because this is taking a bit longer than normal. I'm going to leave a little bit of a gap here for our signal generation in a minute. But let me get all that in. And then what else are we going to need? Well, we're going to have to add in indicator data. So indicator data to our subplot. So I'm going to need 2 of these. So if I come in and hit that 2, and for this code snippet, all you need to do is tell it where to find the values in the columns that you want to place. So if you remember, we renamed ours K and D. So just tell it to go and have a look at K. And then for this one, go and have a look at D. And there we go. And then I'll make that red and blue, because that's kind of traditional. So, and should we make the line? I'll tell you what, because what we're going to be doing is trading off D today. So I'm going to make that slightly thicker than K. And then finally, this bit at the bottom here styles everything up. We'll start it up a little bit in a bit, but for now, let's just make sure our chart's working. So I'm not going to save an image, so I'm going to delete this line here. If you want to save an image of your chart, then just keep that line in and run the code. This part here is probably the only sort of tricky bit within the code. What this part does is set the height and width of your chart, gets rid of an annoying range slider thing there and sets the actual chart theme. And then this is just me styling up the grid colors, because standard ones are a bit too bright. So, and then this is the only bit that's kind of semi-tricky. Plotly, when it renders your chart, is going to render every day of the week. So Monday through to Sunday. But obviously we don't have any data on weekend days. So when Plotly does that, it's going to render gaps in your chart and your indicator data. So what I'm going to do is, you would keep this line in here if you were doing, say, an hourly chart. But what we're going to do is create a range break on the x-axis. So the x-axis is going to display the date, and we're going to create a range break here, which starts on Saturday and ends by Monday. So effectively we're saying don't display Saturday and Sunday's date. And then final thing is to set the index as the date column, and do that just above, or it gives you an error. So And what we'll do is we'll run all this now, and we might have to do it a couple of times because Plotly's a bit fickle. I don't know about these colours, but here's our price chart. So I'm going to make it a little taller. It just seems a little bit short and squashed. There you go, that's a bit better, isn't it? So now we've got %K, which is in red, %D, which is the one that we're going to be concentrating on today. That is in blue. And then let's tidy this up a little bit. We'll give it a title so we know what indicator we're looking at, and we'll give it some frame of reference with some horizontal lines across here, probably at 80 and 20, I'd say. Yeah, 80, 20, we might do 50 as well. So if I come back in here now, what we're going to do is add a levels line to our indicator. So we're going to come in and add a H line. And there we go. So I'm going to add this in twice. And then what we're going to do is set one at 80, one at 20, and just see what that looks like. And that's basically going to add a horizontal line across the indicator. So in row 2. And the line width is thin, 0.5, and the colour's grey. So if I now run that again, shift return to run it, you can see we've got them there. I might add one at 50 as well. So what I'll do is I'll just copy this and add that in there, change that to a 50, and then we will add there you go, that looks better, doesn't it? You've got more of a frame of reference. So we will add a little sort of indicator title here just so that we are sure what we're looking at. So to do that, we're going to update our layout, adding text annotation. And I'm going to take all this little code snippet here, come back and paste that in. Just like that there for now. And this is going to be our ratio oscillator. So keep it with this code snippet is we're telling it to update the layout, adding some text, and then where you see dict here, this is styling it up. So you're telling it what you want your label to be, and then white and size 12 text. And then the key bit here is xref and yref paper. What that does is create sort of grid lines across your chart where on the x-axis, which is running from left to right, on the left-hand side is 0, and on the right-hand side is 1. And for our y-axis, running from the bottom to the top, 0 to 1. So we set sort of a grid layout on our chart. And so for x equals 1, I'm basically saying put my label as far right as it can go. And if I change that to x equals 0, it would be far left, and x equals 0.5, it would be in the middle here. And then for y is dictating how high up you want your label to appear. So I've got that at 0.2 at the moment. It probably wants to come up just a little bit. So I'm going to leave it on the right hand side, and then I'm going to take that to 0.235, say, and that's a bit too low. So let's move that up a bit. Where is it? Oh, there you go. So if I make that 2.5, and it's still a bit low. Ooh. Let's do 0.3. There you go. That looks a bit better, doesn't it? So that's our ratio stochastic oscillator or ratio oscillator there. So, okay, so we've created our chart. We kind of know what our indicator looks like. In terms of our strategy then, what are we looking for? And in this case, rather than looking for oversold and overbought positions, because you tend to, as much as people look to try and buy lows at this point here and all that, you tend to find that you get these lows all the way down on a trend, and you get these highs all the way up on an uptrend. And what we want to do is avoid all of the false signals that come with trading from oversold or overbought positions, and instead all we're going to look for is turns in the blue line, in the D line. So if I come in here, we're going to use a .iloc indexing method. So, and what that does is it allows you to pick out bars from current. So what we're looking for is a turn, and to qualify as a turn then, our current bar would need to be higher than the last. So if you look at our values here, you can see November the 7th is higher than November the 4th, but November the 4th needs to be less than November the 3rd. And that's what tells you we have made a low. We have turned up So that's going to be our method for quantifying our signal today. So what I'm going to do is come back into the template, and I'm just going to pull this entire little code block here, and this is quite simple. All it does is create a signal function, creates a variable called signal and makes it the same length as our data frame, and then the key line is here. So for I in range 2 for the length of df, it basically is running a loop that's starting at row 2 and runs for the full length of our data frame, and all it's doing is going line by line, looking for our buy and sell parameters to be hit, whatever we specify here. And in our case, where it sees our buy parameters hit, puts a 1 in that signal variable. Where it sees the sell parameters hit, puts a 2 in the signal variable. And where there's no buy or sell parameter hit, it just remains a 0. So, and then creates a new column called signal within whatever data frame you run it for, with those values in place. So 1 for buy, 2 for sell, so on and so forth. So for our buy then, what we're looking for is the indicator to turn up. All we're looking at is D. So if I go, so it'll be data.d.iloc. So iloc I is representative of the current bar, I-1 yesterday's bar, I-2 2 days before current, I-3 3 days before current, so on and so forth. So for our code to work, I must be greater than I-1, so current bar has to be higher than the value yesterday. So data.d.iloc I would need to be greater than data.d.iloc I-1, or yesterday's bar. And it's just so we don't get false signals, I'm just going to copy that line across here. So our value yesterday must have been less than our value 2 days ago. So that is our a buy signal effectively. And for this one, this is a long only strategy that we're creating today. So we are not actually going to have any sort of sell signal methodology. All we're going to use this for is as like an investor would, or a market time an investor would, in terms of trying to pick the best times to get long. So that is it for our signal function. And if I run this now, it should create a new signal column here. I don't know if we have any recent signals, but if I go in and take the tail end of the data set and display the last 40 rows, have we got a 1? We have indeed, right? So we can kind of check it. So the current bar would have needed to have been, the current value of D must have been higher than the last, and the bar before that had to have been less than the bar before that. So that seems to be working fine. So let's just get rid of that. And then what we're going to do next then is create long entries. We're just going to pull this little code snippet here and paste that in there. And then I'm also going to take this little bit at the bottom, which is useful, contains some useful data. So this little function called long entries here, all it's doing is taking the values in our signal column. Where it sees a 1, it picks out the low price. So it takes out the value in the low column and minus a small offset. And that is what Plotly is going to use. That price data there is where Plotly is going to place a marker on your chart. Where there is no 1 in that signal column, it just puts a none value, so Plotly displays nothing. And then it's going to create a new column within our data frame called long entries. And then we use a lambda function here to apply this function in order to apply that into this, pull that data into this new column. And then this bit here, all it's going to do is print the number of times 1 and 0 appear within our signal column. So if I run that now, you can see you get 213 buy signals, and the remainder are just a do nothing signal. So in order to display that on the chart, we're just going to come back into this bit here, and just going to take the long entries part today because we don't have a short component to this strategy. So, and if I just paste that in there, all that's doing is looking in this newly created column, long entries, and where it sees a price, it is going to create a marker, which is going to be a white arrow up and size 7. Okay, so if I run everything again, what you should see is places on the chart where the strategy got long, and it looks pretty reasonable. Obviously, you're getting signals in these sort of flat to down periods where, you know, you're going to have to use a little bit of risk management on your portfolio. But the main thing is that in the uptrends, you get some really nice signals here. So, you know, at the lows before legs higher, or just as legs higher start to begin. So looks to be okay. I'm displaying the first 200 bars here. And normally I would display sort of the last 350-ish. So we'll make that 350 and then 2200. And then let's just run that again. And there we go. All right. So now we've got sort of 300-ish bars that we're looking at. And you can see during this sort of rally higher, did really well. I mean, you're getting some false signals here, for example. And obviously, if you're in sort of a less bullish phase where price is sort of topping out or going flat, then you can get false signals here where you just don't really get any kind of lift off following the signal. But during the actual main part of the downtrend, you don't really get a lot of signals, because obviously this blue line here, D, is just falling. And it's only when it starts to turn up that you get your signal. So you could probably smooth this line a bit even further to reduce false signals and avoid the worst of downtrends. But on the whole, certainly in bullish phases anyway, it's good. So let's create our strategy backtest. And to do that, I'm just going to pull this backtesting script here. And let's pop this in there like that. And what this does is take this function here, just pulls in the value of your signal column, and we create a strategy class called MyStrat, which we initialize here, and then pull in, using that signal function, we pull in the values from the signal column. So wherever you see self.signal, that's the strategy looking for a value in that signal column, or a one effectively. So for keep this part if you want to sell after a certain amount of time, but we're not going to do that today, and we're not going to flip short either. So all it's going to be is a long only strategy. So effectively, where self.signal is 1, if we're already short, or we don't have a position, we close it, and we're going to buy with 99% of our available capital. And then this part here, we're not going to trade on the close, and we're not going to hedge because we have no short component. And the standard here is to buy at the open following a buy or sell signal. So, and we actually don't really need this line here, but I'm just going to leave it in for completeness. And then commission, we've set a fees at 0.05% on each trade. Margin equals 1 means no leverage. And we're starting with a capital of 100 grand, running the MyStrat strategy class and taking data from DF. So if I just run that raw now, you're not going to get any kind of trading, because basically you're getting long, but there's nothing to tell it when to sell. So what we're going to do in order to make this an actual strategy is just to add a little bit of risk management, and effectively that's going to be adding a profit target and a stop loss. So for our strategy today, we're going to set a stop loss at 5%. So that would be 0.95 times price. This price here is basically taking the value at the close price on a signal bar, and then we just key from there for stops and losses. And then for a profit target, we're going to put that at 3.5%. So that would be TP for take profit is equal to 1.035 times price. So 3.5% above this price, and the stop loss is 5% below that price. So that is our back test. Let's run it, and you can see it does really well. So we've reduced our market exposure time versus buy and hold by about 30%. So not amazing, but excuse me, but definitely reduces your market, exposure risk. But the main thing is that we beat the buy and hold return. So we got 294% versus buy and hold got 262%. We have an extremely low drawdown. We've got 96 trades, which is not really enough to be 100% comfortable that your strategy is, solid, but it's kind of on the borderline. You're looking for 100 trades minimum, really. So you're nearly there, not quite. So your worst trade lost you 7%. Your best trade made you 4.5%, just about, and you win 80% of your trades. So good strategy. Winning 80% of the trades shows you that most of the time these buy positions here, these points at which you're getting long, are good. So, excuse me. So, and don't forget, obviously, that over the last 10 years in the S&P, we've had some significant drawdown periods, COVID, bear market 21, 22, that kind of thing. So obviously we significantly outperformed the market in terms of drawdowns, which is really good. And bearing in mind that we've got a stop and a profit target in place on the strategy, you probably could get away with using a bit of leverage. What that will do is it won't affect your win rate or your best trade, worst trade or anything like that, but it is going to affect your drawdown. So if I use 2-to-1 leverage on this strategy, it is going to increase my drawdown to 26%, but my overall return goes to 1,287% versus buy and hold 262. You could probably even get away with using 3-to-1, but we would not encourage that. And if you did, you'd make 4,000% instead of, it's kind of ridiculous, really. But okay. And that's after, don't forget, paying fees on the strategy as well. So it's beating the market after paying fees and using no leverage anyway. But if you wanted to run it with a bit of margin, you could juice the returns quite significantly. So okay, so let's have a look at a profit and loss and see where our bad points came. So I'm going to take this code snippet from our template here and paste that in. So this line here, all it's doing is creating a variable called trades, which goes into our stats object here, our stats variable here, and takes the list of trades there. So if so once you run this, in fact, let me just comment that out a second. So say I have that and I want to have a look at what's in trades. It's going to give me a list of every time you bought and sold, which bar you did it on, the price, the stop losses and take profit targets, your P&L in monetary terms, how much commission you paid on each trade, so like $100, and the percent return, etc., etc. So from that, we are going to, let me just uncomment all this here. We are going to create a cumulative P&L graph, effectively. So we're going to go into our trades list here and grab data from this P&L column, just adding up the wins or losses on each trade in, the monetary gain or loss for each trade. So we're going to use the cumulative sum method on the P&L column here to create a cumulative return, and then we're going to use Plotly to display that. And I'm just going to delete this because I'm not going to save the chart image. And if I run that, you can see that's our P&L graph. So pretty consistent. Did have some pullbacks. So worst period of time was this November 2021 into April 2022, around that bear market time, and you did lose a little bit of money there. But on the whole, pretty good. You got another one here in 2024. But genuinely pretty decent. Again, you don't really have enough trades, in my opinion, to be absolutely confident, but still works pretty well and deserves a bit further optimization, maybe, or a bit of fine tuning. Lastly, we're going to do the Monte Carlo simulation, which is not going to look that great, this chart, because again, we don't have enough trades, but you can see that, reasonably decent sort of bottom left to top right profile. And, there is a bit of variance in the lines. So maybe not all that good, but your worst strategy here was down 10% after 14 trades and then took off. So pretty decent, really. So that is it from me. If you have any questions, please feel free to email info@bubble-analytics.com. Otherwise, I will see you next week.